What are the basic benefits slash price are to LLC, onboarding, maybe trust, explain, proactive, please. Well, I mean, I just kind of went through some of the benefits of an LLC in Wyoming that we structure. And again, we can do that in any state. Use a registered agent for the address. We are the sponsor on there, so our name appears for the anonymity that you get. The other benefit, that you can't ever mitigate all of your taxes, but the benefit of holding the assets in an LLC is going to be write-offs, right? If there are business expenses that are legitimate, like traveling to a conference or somewhere maybe you go to vacation while you're there, you can write that off. If it's educational material for you to be able to learn how to invest your assets through the holding company, which you could have multiple sleeves for real estate or other things post-price appreciation, you can write all of that off. If you buy a vehicle and you use that vehicle for work purposes, and you have a separate vehicle that you use for personal purposes, under Section 179 of the tax code, and it's over 6,000 pounds, you can use it as heavy equipment. You can write off the total cost of that vehicle, even if you didn't put any money down or a little bit of money down, to be able to offset a pretty substantial portion of your taxes or the income that you're making off the assets. We help people navigate all of that on the tax side. We do all of the compliance to make sure that you maintain the anonymity. Why would you do it pre-price appreciation instead of post-price appreciation, I guess is what you're asking. So I'll touch on the trust for a second. An irrevocable trust probably isn't appropriate for most people pre-price appreciation, unless you have a substantial amount invested in crypto. If you have $300,000 or $400,000 in XRP and other digital assets, it's worth a conversation. Maybe even 150 if you really think it's going to move quickly. And you're single. If you're married, sounds like you are, since your wife is watching. You guys get $30 million currently under the tax code to be able to gift out of your taxable estate over your lifetime. Anything above and beyond that becomes taxed at 40%. So it would behoove you to get assets out of your taxable estate sooner than later, if you would like those to grow inside of a trust and not have to deal with that, gift tax on the other side of appreciation. With an LLC, one of the benefits you get there is, let's say you had 50,000 XRP and it goes to $1,000. You have $50 million. If it's inside of an LLC, you could gift small pieces of equity to other people you want to take care of on the cap table, your sister, your cousin, your uncle, whoever, your parents. And now that you have minority owners on the cap table, you could go get a 409A valuation done on the LLC, and you would get a reduction in the actual value of the company because it's not as marketable to a buyer. That reduction is normally somewhere between 25 and 35%. And so you could squeeze that $50 million worth of XRP that's now in the company down to $30 million